Namaste, welcome to Arthaniti, where we discuss money and money matters to help you in your investing decisions. In a year when the Indian auto industry was navigating various cross currents, Mahindra and Mahindra Limited has emerged as a standout performer, showcasing remarkable resilience and strategic foresight. Its Q4 and financial year 2025 results showcase a equally compelling story, one that of market leadership, financial discipline, and forward thinking investments. It has put Mahindra and Mahindra Limited in the forefront of India's automotive revolution. While many of its peers are struggling with profit margins, the diversified portfolio of Mahindra and Mahindra has helped deliver remarkable returns to its shareholders. Mahindra and Mahindra Limited, in its quarter 4 and financial year 2025 results, have broken all the records. The consolidated quarter 4 results of financial year 2025 showcases Mahindra's growing market dominance. Revenue surged to 42,599 crore rupees, marking a substantial 20% year-on-year growth. Profit after tax PAT reached 3,295 crores, also up 20% year-on-year basis. The board of directors have declared a dividend of 25 rupees and 30 paise per share, representing a 20% increase from previous year. Now, for the full financial year 2025, Mahindra has continued its upward trajectory. Consolidated revenue reached a whooping 1,59,211 crore rupees, growing 14% year on year basis. Profit after tax reached 12,929 crores, an impressive 20% jump, excluding the impact of KG mobility. Return on equity stood at a healthy 18.1%, and earnings per share also at a good 115.1 rupees per share. On a standalone basis, the company's performance was equally impressive. Q4 revenue stood at 31,353 crores, which was up 25% year on year basis. Q4 profit after tax increased 21.85% year on year basis to reach 2,437 crore rupees. Full year profit after tax grew at 11% to reach 11,854 crore rupees. What's particularly noteworthy is that Mahindra achieved these results while absorbing significant charges related to the international subsidiary. In the standalone results, the company has taken a charge of 654 crore rupees towards restructuring efforts at two of its international subsidiaries. The first one being Mahindra Agricultural Machinery in Japan, and the second one is Sampo Rosenliu, Finland. Now, in spite of these charges, the company has delivered a 22% increase in profit. Excluding these one time charges, the increase would have been approximately 55%, reflecting the company's strong underlying operational performance. See, it is very important that you go beyond the face value, look deeper beyond what is obviously stated. Do away with the initial layers and see what lies beneath. That is how you will understand the quality of the stock that you intend to study. What really is the worth of the company? And that is what we intend to do in our videos, in our well researched, deeply studied videos of stocks. That is why it is important that you subscribe to our channel. Now, moving forward on Mahindra and Mahindra, well, they have consolidated their position as the number one SUV manufacturer in the country. The revenue from market share in SUVs reached 22.5%, up 210 basis points year on year basis. The Q4 volumes grew 18% to 2,53,000 units, with utility vehicles showing similar growth at 1,49,000 units. The auto division's standalone profit before interest and tax for quarter 4 increased 28% to reach 2,306 crores with a margin of 9.2%. This performance is particularly impressive given that the passenger vehicle market in the country grew at a modest 2% in financial year 2025, reaching a record sales of 4.3 million units. Now, while the industry grew modestly, Mahindra has outperformed. The company has strengthened its leadership position in the light commercial vehicle segment as well. Its market share has reached 51.9%, a 290 basis point jump year on year basis. The company reported a 480 basis point gain in the light commercial vehicle segment compared to the previous year. The electric vehicle strategy of the company is also impressive. It has achieved number one position in the three wheeler electric vehicle segment with a 42.9% market share. The EV penetration in India reached approximately 25% in the last quarter. The company has began shipping its battery electric vehicles, though these are currently loss making given the initial setup costs. The performance is aligned with broader industry trends as India's EV market saw sales soar to 1,67,629 units in April 2025, representing a 44.62% increase year on year basis. The farm equipment segment has also shown remarkable resilience and growth. Mahindra maintains its dominant position in the tractor market. Its full year market share has reached 43.3%, up 170 basis points. The quarter 4 market share increased to 41.2, gaining 180 basis points year on year basis. The Q4 volumes in this segment rose 23% to 87,000 units. The segment's standalone profit before interest and tax increased 51% to reach 1250 crores with an impressive margin of 19.4%. Now, where the domestic tractor sales market grew by 25.4% in March 2025, Mahindra's sales grew by 34.21% in the same month. Now, this showcases increase in market share for the company. The profitability of the farm segment also showed remarkable improvement. Core tractor profit before interest and tax margin improved by 200 basis points in financial year 2025. For the full year, the standalone profit before interest and tax for the farm segment reached 5,371 crores, which represents a 30% increase year on year basis. One of the key strengths of Mahindra is its diversified business portfolio, which provides with multiple growth engines and helps mitigate risk. Firstly, let us look at Tech Mahindra. Now, the performance of Tech Mahindra has been impressive. Earnings before interest and tax grew to 9.7%, up 360 basis points year on year basis. In quarter 4, revenue reached $1,549 million dollars with EBITDA margins at 10.5%. Company secured a deal worth nearly $798 million dollars in the quarter 4 of financial year 2025. Free cash flows have been impressive at $150 million dollars in that quarter as well. Coming to Mahindra Financial Services, its assets under management grew at 17%, a similar percentage rise in the loan book as well. Profit after tax increased 33% year on year basis. Some other growth businesses, Mahindra Landscape Developers has achieved its highest ever gross development value acquisition of 18,000 crore rupees. Residential pre-sales reached 2,804 crores, up 20%. Mahindra Holidays increased its room inventory by 10% to reach 5,847 rooms. Checking the financial health of the company by analyzing its balance sheet, Mahindra has significantly reduced its debt. Its debt to equity ratio now stands at a mere 0.0013, which is a 99.90% reduction in its debt to equity ratio. The debt to equity ratio was highest at 1.94 in March 2021. Now, it also maintains a strong liquidity position. Cash and short term investments stand at a whooping 425 billion rupees. The company's short-term assets, which are recorded at 1265 billion rupees, exceed its short-term liabilities, which are recorded at 903 billion rupees, and its long-term liabilities at 981 billion rupees. For financial year 2025, the return on equity was at a good 18.1%. Well, the auto division return on capital employed was at an impressive 45.2%. Now, to fully appreciate the performance of Mahindra, it is essential to look at the broader industry context. The auto industry trends show that overall growth of 7.3% in domestic sales was achieved and a 19.2% increase in exports for financial year 2025. Passenger vehicle sales reached 4.3 million units, growing at a mere 2% year on year basis. Utility vehicles continued to drive growth, with their share in total passenger vehicle sales rising to 65% from around 60% in the previous year. Two wheeler sales reached 19.6 million units, showing 9.1% growth. Mahindra's strong performance in the tractor and SUV segment can be attributed to the strong rural demand. Well, the passenger vehicle performed better in the rural areas with growth of 7.93% compared to urban areas, which recorded a growth of nearly 3%. Electric vehicle adoption has changed from why an electric vehicle to why not an electric vehicle, and this has helped companies which are entering in this segment. What is the current valuation matrix of Mahindra? Well, its market capitalization stands at nearly 3,85,000 crore rupees. Stock price is hovering around 3,090 rupees per share. Price to earning ratio is at 29.9 and book value is at 620 rupees per share. Now, the PE ratio of 29.9 represents a premium compared to some of its peers, but this premium can be justified given Mahindra's market leadership and diversified business model and strong growth projections with an equally strong financial results that the company has shown. It is very important to never ignore the management commentary, the people who run the show. What are they saying? Do they sound confident? Well, let us have a look. Dr. Anish Shah, the group CEO and managing director, has stated, I quote him verbatim, we have delivered strong growth on the back of stellar execution in financial year 2025. Auto and farm continue to gain market share and expand profitability. Tech Mahindra is making commendable progress towards its dual objectives of strengthening client positioning and margin expansion. Mahindra Financials has maintained GS3 under that is GS3 assets under 4% as committed, remained focused on controls and delivered a 33% growth in profits. Now, to explain in short about the GS3 assets, what he said about them. Well, GS3 assets are basically those loans which have not been serviced for more than 90 days. They are categorized as high risk non-performing assets under the Indian accounting standards. Now, to keep those loans under 4% is what the company has achieved. Mr. Rajesh Jejurikar, who is the executive director and CEO of the auto and farm sector, has commented. Now, I again quote him verbatim. We continued our outstanding performance for the year in quarter four of financial year 2025 with significant gain of 310 basis points year on year basis in SUV revenue segment and 480 basis points year on year basis in light commercial vehicle segment. In tractors, we reached our highest ever quarter four market share of 41.2%, gaining 180 basis points year on year basis. So, the management commentary is quite optimistic and which showcases good future prospects of the company. To conclude, Mahindra's quarter four and financial performance has showcased its ability to outperform during a challenging market environment. The company's strategic focus on high growth segments, operational excellence, and disciplined capital allocation has helped deliver exceptional value for its shareholders. Its leadership position in SUV and tractors, along with its strategic investments in electric vehicles and a diversified business portfolio, solidifies its position for future growth. The company's financial health has also improved significantly with a stark decrease in its debt to equity ratio. What sets Mahindra apart is not just its current performance, but its forward looking strategy that anticipates and embraces major transitions reshaping the global automotive landscape. The fundamental analysis suggests Mahindra's premium valuation reflects not only its current success but also the market's confidence in its long term growth trajectory. Well, this fundamental analysis was for educational purposes. We hope that we have given you an all round picture of the company. Please comment with what you have to say about this stock and help others also study this stock well. This video was not a stock recommendation and was for educational purposes. It is recommended that you approach a financial advisor for taking the right investment decisions. If you have liked this analysis, please like the video and subscribe to our channel for more such informative content. Until next time, stay safe and goodbye.